Hello, guys. So this is going to be a logic review, a strategy based on some of John Eller's ideas, or at least some of his indicators and the ideas. I don't know. Maybe they're a mixture of how I understand his ideas, because I wouldn't say I'm the best interpreter of his ideas because they're very mathematical. I'm not a mathematical guy. I just try and find solutions to work on the market. So basically the entry, let's talk about the entry first. Okay, so as you can see, I'm not gonna if you want really detailed stuff, you have to go into the strategy and figure out if you watch the other videos, right? But as you can see right here, right, mainly we have to dip below the threshold. Okay, so this is a massive stochastic, right? This is the John Eller's massive stochastic. Okay, so when this guy goes into the overbought zone, sorry, oversold zone, we presume that the market's going to turn around and give us some space to make some money on the way up, right? So that's where we want to enter, right here. Okay, and we also want to have some sort of impulse, to tell us that, okay, it's time to go for it. And there could be many, all right? And there could be numerous ways of identifying this spot. You can go for a pivot, you can go. So what I went for is basically, and the results will differ, right? So it's obviously my idea is to give you, the inspiration and the concept, right? And that can be, moved forward, and because different instruments will behave differently of how this kind of suits. So anyway, basically in my case, what I found useful, right, is I want the super smoother, to be touched or crossed under and then, crossed back over. Okay, in that case, I consider this, to be a case of an entry, and I check back with my stochastic, which has to be, below a certain threshold. In this case, you can actually see that the threshold is actually pretty low. It's actually 5. So I want it to be really, really low. And guys, I mean, there are other cases where, you could set it higher, but you can work out a slightly different entry, because there are a lot of cool entries that are also there, but it's hard to distinguish between those that are, not as good. Anyway, so that's when we enter. We basically, the idea is to enter when the stochastic is low, right? Because when it goes up, what I want to do when it goes up, right, is I want to make some money on the way up, but I also want to make some money within a few cycles. Okay. So what I'm trying to say is, so for example, right here, as you can see, it dipped below, and then it went to the other side, and you can see this little arrow here. Okay, when it actually went to the other side, that's when I checked back that I made some money, and I put a break-even stop right here. Okay, or I could start trailing, or I could start a bunch of other stuff. I don't even actually put a break-even stop here. I actually see how much money I made, and my break-even stop, right, actually equals the percentage. Well, in this case, it's 0%, so that'll be exactly the position entry. But I can make it to 50%, and I can actually make it halfway through from my close here and my entry here. I could put it right here, okay? Or I can put it even higher, all right? Or I can start trailing here, etc., etc., etc. Okay, so there's so many ideas that you can base around this concept. There's just numerous, okay? So presumably, so the concept is, right, so if I go down here and I enter, right, according to the stochastic concept, if this thing goes up, I want the market to reflect that, okay? So I'm planning to make some money on the way up. If I didn't make any money right here where the arrow is, that's where, this guy went up. That's it. I want to quit. I want to quit my position. That's it. I'm done. I know that it's not, doesn't always, thrust up at this point. Sometimes it could, at this point it can still be down here, but, and then thrust up, but I don't care about that. I mean, there's still, a lot of other opportunities. I want to filter that out. Now, another thing that can happen on the way up right here is actually this thing, sorry, not this thing, this thing can actually dip down here below again. And that would mean that, you know, the direction of the market is trying to continue to go downward in some cases, right? Obviously not all. Now, I don't want that as well. So if this thing does not go up and dips below down here before it actually goes up, that's it. I want to quit that too. That means that my entry was not as good. Okay. Now, so what happens next? Next, this thing goes down, which is a pullback. All right. Okay, I'm fine with the pullback after it made a thrust, but you can actually choose to exit right here, you know, if you're in the money, or you can split right here and make a break even. So there's so many things that you can do here, you know, in terms of position management and further, you know, creativity. But I'm just showing you the main framework and the concept, which already works as is. And maybe it's good to keep it as is. You know, once you start complicating things, might not get you to where you want to go as well. So right here, right here where this purple arrow is, right, is actually when we made the cycle down, the pullback. And there are options here, right? So right here, I want to check that I'm still in the money, but you might want to check as well, okay, am I like above this previous point? So was it a, you know, a sort of, so we're in the ideal world. So here's our entry, here's our first thrust, here's our second thrust, and here's our, okay. So that's, so when we check here, and so on, okay. That's what I'm doing here, okay. So I'm checking for this point whether I'm still in the money, but you can check, you know, if you've fallen below 50% or, you know, etc., you know, you can adjust this, okay. Now, finally, obviously, if I'm not in the money right here, this will actually exit by break even if, you know, if things go if it falls below the entry price already. So I'm already safe. After this point here, I'm actually pretty safe, okay. Now, the last point, and you can see this was pretty lucky because it kind of went up and up and up, and then it went here. Here is where I stop and exit. But you can carry on, you know? So, like, this particular strategy, I like to exit on the third loop, okay? But you can optimize that, you know? You can actually put that, and I'll show you that the loop exit is something that you can, you know, you can put 5, 10, 11 there, or exit here using the concept, okay? So, yeah, guys, and that's, well, that's pretty much all to it. There is not even a stop. I mean, you can have your initial stop right here really far away, but or some risk value that you're ready to take on your first entry. But the main idea is to let it breathe out, okay, and do this. So let's, I don't know, let's have a look at a few more trades. So here's another one. We enter right here. You can see how it went up. This was, if this went here, it would have exited, okay? But here's the first arrow, okay, that's the first check, we're in the money. Second check, we're still in the money, and then there's the exit when it makes another thrust, okay? But there's so much stuff you can do in between, like checking how much the market has made, checking how much the market has pulled back, okay, and optimizing all that, looking at all of that, okay? So let's, here's a break-even one. So you can see that I entered, but as you can see, when we were up here, we're in the money, so we put a break-even stop here, but the market decided not to go any further, okay? And it went up, okay? Now, if I can put a break-even 50% here, the break-even would have been placed right here, okay? And then I would have even made this trade a profitable one, okay? So for example, this guy here. So he entered, you see, and it fell back in. Although it did go and proceed in a pretty fancy manner, but again, this is how, like, I don't know, maybe it's going to go down after this. So you can see right here, it went and dipped below the threshold, and that's it, I'm out. Okay, I don't want to trade this anymore because, oh, I don't know, maybe it's going to go down after this. obviously this looks perfect now, but might. So another one here. So this is the break-even exit. Okay. And so on, guys. So this is the main concept around this strategy. And you can have as you can see, you can have quite a few sauces to it, or quite a few flavors. Okay. Now, obviously, not all trades are as good, right? So here's your entry. And, by the time you check back right here, this has been, this is a loss. You just have to take it. You can't live without a loss, okay? But at the same time, look at the next one. It's in, check, in the money, check back, still in the money, okay? Yeah, sorry, that's the third check, yeah? Check back, okay? Anyway, take care. Check out the strategy on the website.